These materials are intended solely for informational purposes. The views expressed reflect the current views and opinions of Patrick Financial Group, LLC, as of the date hereof and are subject to change. Patrick Financial Group, LLC is an SEC-registered investment advisory firm. Nothing in this podcast should be deemed to be a guarantee of future performance. Investing involves risk, including a potential risk of loss of principal. This podcast is in no way a solicitation or offer to sell investment advisory services except where applicable, in states where we are registered or where an exemption or exclusion from such registration exists. There is no guarantee that any projection, forecast, or opinion in this material will be realized. Past performance is not indicative of future results.
Welcome to the Howell Business Beat, where industry experts share their experience and insight on such topics as leadership, innovation, entrepreneurship, and so much more. I'm your co-host, Diane Samples, along with Janelle Best from the Howell Area Chamber of Commerce.
Hi, everybody. I am Janelle Best, president of the Howell Area Chamber of Commerce, and we are excited to be here in studio today, joined by John Pelon. He is a financial advisor and president of Patrick Financial Group. Welcome, John.
Thank you so much for having me.
Yes. Well, we are excited to be here today and just talk a little bit about your perspective as a business owner. But also, I know that you guys do some amazing things in the community. So we're going to talk a little bit about your kind of cause-related marketing that you do and why you align yourself with those organizations. But we're also going to, and this is great because it's going to be a multifaceted show, we're going to talk about some market updates and what we're looking at as rate hikes and all of these different things that we have going on in the industry today, but also a perspective on how you guys approach financial planning. So thank you for joining us today.
Thank you again.
All right. So as we start our show today, I would love for you to just share a little bit about yourself, who you are, and how you got into this industry.
So I started a long time ago at a bank called Manufacturers Bank that was around Michigan until the early 90s. And I started on the institutional side of the business in the institutional trust department there, working with pension funds, endowments, foundations, larger pools of money. From there, I went to one of my clients. The Detroit Medical Center was just forming, and I helped them put all the small pensions that they had together in one large pension. And they brought me over to work on other pools of money that they had within the whole hospital system. After that spell, I went into institutional investment consulting for a number of years, working initially with hospital systems, and then eventually started doing some work with colleges and universities, private foundations. Went back to the banking world. At that point, Comerica had bought Manufacturers Bank, and I went back to the institutional trust area there before I set out to start working about 10 years ago with individuals. So I went from the dark side of the institutional world to the light of working with individuals. And that change is interesting because when you work with institutions, you tend to work with a board, an investment committee, very smart people, understand investments very well, but at the end of the meeting, they walk out of there and none of the impact of the returns of those investments they feel because it's someone else's money. Mm-hmm. When you work with individuals, it's very personal. Mm-hmm. So that's a significant difference between the two groups that really we're very in tune with at Patrick Financial Group when we work with individuals and their money. I've been in the Southeast Michigan area almost my whole life, and have lived in South Lyon this is our 33rd year.
Wow.
Yes.
Amazing. And how many years did you work with on that institutional side?
So I worked on the institutional side for, over 20 years.
Wow. So you kind of found a niche there, but it sounds like your passion more maybe working with individuals.
Yeah. So I've seen both sides of the investment world, and there's a lot that institutions do that individuals can benefit from. when we start to bring some of the strategies that are used on the institutional side that individuals really haven't had access to for a long time, but now through a lot of different products, we're able to put those into portfolios.
That's awesome. I love the personal touch of it. You can definitely see your joy for that.
Well, thank you.
And fun fact, I do remember Manufacturers Bank. I started my banking career at Standard Federal Bank.
Okay.
So the big blue box. So I do remember Manufacturers very well.
Yeah, those were the old banks at the
They
time.
were, and they were great institutions.
Yes, they were.
They really were.
So, as we talk about where you were and kind of the history, and how did you get to Patrick Financial Group?
So we got to Patrick Financial Group in an interesting manner. When I started working with individuals, I met up at a conference with a friend of mine who runs a CPA firm out of Plymouth. At the time, his firm was doing about 5,000 tax returns for individuals and small businesses. And he was at the conference and he was giving a presentation on the new tax law to a lot of financial planners. And I was at the conference giving a presentation on utilizing alternative investments in portfolios for individuals. And we started talking, and the firm I was with at the time was doing investment advisory work for about 5,000 people. And his firm, obviously 5,000 tax returns. It seemed like a good combination. So we started having discussions. One thing eventually led to another. We didn't go through with the merger, but he wanted to have an investment advisory side of his business. And so I went over to set that up for him about the same time that the founder of Patrick Financial, Joby, had started asking about transitioning his business, and he asked my partner whether he could do a business valuation as he started this transition. And my partner said, sure, I can. And if you're interested, we'd also like to have an opportunity to make an offer. And it took a little while, a number of years, but eventually we came to an agreement back in 2021 to purchase Joby's stock in his company. But over the time that that we were all coming together, I got to know Joby very well, and he got to know me, and we talked a lot about our investment philosophies and how we could merge them, and I could bring my history to help Joby's clients. And we last year, as Joby was transitioning the business and introducing me to everybody, it's really when we started melding those philosophies and really making it work in a very difficult market environment.
Absolutely. Yeah. Wow. So I'm really happy that you shared that with us, because I think that you offer a really unique perspective from a business owner's standpoint, but also going through that process of that transition, acquisition, and seeing that succession of business is something that I think really resonates with listeners, because we're seeing a lot of that right now, and what an experience that must have been.
Right. Well, we have a large number of people who are in a very similar place with their businesses. Mm-hmm. They started them a number of years ago, mm-hmm. and they're looking and saying, well, what's the legacy of my business? Yep. And if you do have to do some planning to execute the strategy. You either have to start bringing people in that want to be there, that want to buy in over the long term, or you have to make a different transition, but it does take some time, and it takes a lot of planning and a lot of number crunching too. So
for sure, in your experience and based on what you went through, what would you maybe share with a business that's considering, that transition or that succession? When to start? Like how many years out?
So I would say at least 3 years out.
Perfect.
You really have to start thinking about it, but preferably 5 years. It does take a while to make sure that the transition is going to be successful from the prior owner, the prior ownership group to the new team, and really making sure that all the clients, all your customers are comfortable.
Well, and kudos to you, because I feel that you guys have done just a wonderful job in making that really seamless transition. It feels very thoughtful. And I think one of those things where you can really see that is in the support for the community. So I know that you guys are very engaged within the community, and I'd like to just talk a little bit about that and the organizations that you do support and kind of the why behind it as well.
So when I came over to Patrick Financial, because I've been in the area for a while, South Lyon isn't that far from Brighton and Howell, I had seen Patrick Financial signs, not just the sign for the business, but at the high school stadiums. We see it at the Balloon Festival. We see it a number of places around the community. But I didn't know the depth of the involvement until I was on site, and I started, looking through all of the things we support. And it makes so much sense because this area, Livingston County, has been very good to Patrick Financial. But we have to make sure that we're giving back. It's not just putting our name on something for the advertising benefit. It's giving back for what they've given to us, and the ability to do that through a lot of really good organizations that reach out and impact very different parts of the community.
That's a huge point right there. I think that is a really good summation of cause-related marketing, the why you do something and why you support, and giving back to the community that, like you said, ultimately supports your business, but also supports the community.
Yeah, it's really, and it's not just directed, we don't just push into areas where we think we have an opportunity to reach a lot of potential clients. We give to a lot of different groups, between the Arc and La Casa, and Love Inc., all, Work Skills, another group that we're very involved with. We're a premier sponsor there. It's giving money that'll spread throughout the community even further than just the people that we'd like to talk to, but it's not just based on that. It's based on how do we spread these our time and our contributions to impact the most people.
It's creating that quality of life within the communities that you live and you serve. And I think that's a powerful message.
It is. It absolutely
really is.
And, I love touching on this topic just because a part of one of the things we're having a lot of conversation about right now at the Chamber. I'm on the executive committee for the Education and Advisory Career Council, something or other. I'm really bad with names. Anyway, I can tell you what it's about. The premise is, looking at education and industry and how we can work together. And one of the things that we're focusing on is career readiness and what does it mean to be career ready, defining that, and civic engagement. is one of those pieces. So being involved in the community and is from a career perspective, an industry perspective, the importance of civic engagement and how businesses and community work together.
Right, and making sure, from your standpoint, that the committee you're on is very important. Making sure that the next generation is ready to step in and move this forward even better than we've been able to do, and they have to be engaged in the community to see what's here, what's available, what opportunities they have. But we have to also make sure that they're ready to do to step in.
Absolutely, and then that there's the understanding around it, and it is really big picture in that way. And interesting, big picture, but it starts right here. It starts in our backyard, and it has to.
Right. It starts. We do a lot of sponsorships through both Brighton High School and Howell High School. Senior Survivor, a lot of the sports teams. You probably see our logo almost every, whether it's the baseball field, soccer field, the football stadium.
Every Friday night.
Every Friday night. I think we're also on the vests or the some of the outerwear for the fishing club.
Oh, that's
Oh,
right.
how fun!
Isn't it the Howell?
Bass Club?
Yeah.
Or Bass Team?
Yeah,
Okay.
the Pro
Club,
Bass
yeah.
team.
How
Yeah.
fun!
So we
That's great.
we apparently have a hard time saying no to anybody who comes, but it really it's just how we have to run our business by making sure the community is strong and by continuing to make it strong.
And it's businesses leading by example too, because there's so many leadership opportunities within civic involvement as well. And I think that's really important, like you said, for those that high school age, and just to realize that it's that greater good. It's being involved in something that's bigger than yourself, bigger than just your team. It involves the community, and I think that's just really important to get the message out there.
Yeah, and I think when they see that, when they see that the community is there to support them, also, it means something.
Mm-hmm. It does, and it's meaningful to them as well. So I appreciate you sharing that with us, and it's wonderful to see Patrick Financial Group being so involved within the community and all of the wonderful things that you guys are doing, and along with your community investments, you also have a really unique way of providing financial planning with understanding. So could you just share a little bit about what that means?
Right. So financial planning with understanding is interesting because that has been our slogan since the beginning. And really what it means is having people truly understand what we're helping them do, as opposed to, you can walk in and have a meeting regardless of your industry, and someone can talk over your head for a half hour, and you walk out of there and you don't know if they're smart or they're not because you didn't understand any of it. Really, I think the smartest people are able to take difficult concepts and boil them down so that the mass market can understand them. It takes a much smarter person to bring a difficult concept to a level that everybody can understand, rather than just talk over everybody's head and people think they're super smart.
I think you're so right on. I love the way that you phrased that. Somebody recently said to me about EOS, so Entrepreneur Operating System. Gino Wickman took a very, very complex concept and whittled it right down to simplifying it. And you're right. Somebody very, very smart had to do that, but it's easy to digest. It's easy to comprehend, and you can put it into action.
Right. And that's how you need to be able to understand what we're doing for you so that we can have buy-in. It helps us. It helps us if you understand the pieces that we're putting together in the big puzzle. We're there to kind of be the quarterback of all your different financial issues. That doesn't mean we're going to try to run them all. We're going to bring in all the other people. We're going to bring in the trust attorney, make sure that you have your trust or your will all set up. We're not attorneys, but what we want to do is we want to coordinate that piece with where your money is. We want to make sure it's all pointed at the direction that you want it pointed for that moment that it has to be pointed there. We're going to talk to your CPA. We have an affiliation with a CPA firm, but we're not going to tell you have to switch CPAs. We talk to all the CPAs because taxes are a very important part of everyone's financial world. We're going to look at your insurance and make sure there's no gaps in coverage. We're not going to try to sell you a homeowner's policy. We don't do that, but we want to make sure that if there's a moment where you need coverage, that you're not going to be left out to dry at some point.
So you're really the holistic financial planner, right? You're looking at the whole picture.
Yes. So we want the full 360
Right.
view because look, our main goal is to build the castle for you, right? But we also have to make sure the moat around the castle is keeping
Secure.
people, the wrong people out,
Yeah.
right? And the bigger castle that we help you build, the further away people come to get at what's in the castle. So making sure we can do all the work in the world and help you build your wealth, but if we don't also get the right pieces around, bring in all the people that can help protect it, and get them all on the same, in the same game plan. And that's why we kind of quarterback the whole process.
Well, we're glad to have people like you because especially in today's climate with things changing and evolving at a rapid rate and trying to plan or put that, that pin on the map and getting there, it's quite a bit of a challenge. So I'm hoping that you can shed some light on some of the current market conditions and we talked about it earlier as we started our show today, interest rate hikes.
Yeah, so interest rate hikes are a big part of what we're going through still. Here we are, the end of April. I think a year ago, everyone would have thought we'd be done with interest rate hikes. We'd see inflation down to a more normal level. The markets would have recovered, all of those wonderful things that really haven't quite happened yet. So last year was a very difficult year. It was the first calendar year since 1969 that we saw both stocks and bonds fall in the same calendar year, which makes building portfolios very difficult because normally you can offset some of the losses in stocks when they're falling by owning bonds. But when bonds fell 13-14% last year and stocks fell at least 20%, all the way to over 30% for technology names, it was really hard to find anywhere to hide. But building portfolios is also about protecting the downside. So last year, we worked very hard to lose less money. And that's a terrible thing to have to tell people, hey, we were successful at losing less of your money, because that's not our job. Our job is to help you make money. But losing less allows us to get back sooner what has come off of the portfolio, and then we can start building a bigger portfolio sooner. So as we go forward this year is going to be all about the market bouncing around, volatility. And we started the year with a very strong January. We sold off some of that in February. We had a banking scare in the middle of March that took even more off of everybody's holdings. We've seen a bit of a recovery, but again, the market is going to bounce all over the place. What the Fed has done, though, by raising interest rates, it's given us a good opportunity to get return from some safe parts of the market. So for a very long time, all the way back to 2008 and 2009 when the Federal Reserve lowered interest rates to zero. They raised them a little bit in the meantime, and then after 2020, lowered them down there again. People who wanted a safe return on their money were only getting 0.5%. They were getting 0.2% from their bank. Right now, we can own Treasury bills, which are 1 year and less Treasury securities, some of the safest investments on the planet, and get almost 5% from those in a year. So we've shifted what was about 15 years of savers being hurt by these zero interest rates, and borrowers, when you can get a 2.5% 30-year mortgage, it has to come from somewhere, and it was coming out of the savers. Now, unfortunately, borrowers are paying 6.5 to 7 for their mortgages, but savers can get a reasonable return for safe investments.
And that's a great explanation, because I don't think very many people truly understand, like you said, that it's a give and take. If you're offering 0, 1, 2% on mortgages, it's coming from somewhere else. And it's you kind of have to weigh where your loss really is going to be impacted the most. Are you losing it on your investments, or are you losing it on that monthly payment that you're having to make each month?
Yeah, that's right. It has to come from somewhere. You're not able to get 7% from safe investments and fund 2.5% mortgages.
Right.
Those two don't mesh very well.
So, Jen, you mentioned the volatility this year. When do you see, I know it's a loaded question. You probably don't have the crystal ball in front of you. But is there, can we see some relief or some stability in the future?
So there is some relief. So the volatility, a lot of the volatility we get is from interest rate increases, larger interest rate increases than the market was anticipating. We're getting toward the end of those interest rate increases. We're going to see at least one more 0.25% interest rate increase, probably coming next week on Wednesday, May 3rd. And then the next potential increase comes in the middle of June. That's the one that no one's really sure of. We'll know more after we hear the Fed chairman speak next week as to how aggressive they still want to be. We have seen inflation slow down. We've seen it come down from over 9% last June, which is great, but again, we're still paying a lot. Now, inflation coming down doesn't mean that we're going to all of a sudden be paying what we were paying back in 2020 for gas and eggs.
One can hope.
one could hope, but we never got back to 25 cents a gallon gas after the 70s.
Well,
so.
And Diane and I talked about our next, our side hustle is really going to be just getting chickens. So.
Yeah, we're raising chickens. We're building a fortress around them so no animals can get in, no disease, and we are going to take the market by storm.
There you go.
We're going to capitalize.
Watch out.
There you go. Probably just in time for eggs to come back down to 99 cents a dozen.
We're doing renovation at the chamber. We're going to have our hen houses in the back.
Oh, man.
But I think once the Fed gets to the point that they've decided they're not going to raise anymore, they're going to wait to see what happens, then the market will stabilize some. We won't get a big rally until the market starts to anticipate that the economy is moving stronger, coming out of potential recession. And then at that point, the market will also anticipate that the Fed will start lowering rates. And the market is always looking out 6 to 9 months. So normally it will start to move higher and everyone will sit back and say, this doesn't make any sense. The economy's terrible. It doesn't make sense that the market is doing this, moving higher in the middle of this recession. but the market usually bottoms sometime during the recession, and it starts to rise sometime before the end of the recession. And the good news, the really good news, is that usually the first year after a recession, the market gives us anywhere from 24 to 27%. But we have to make it through this whole period of potential recession, inflation, interest rate increases. But the good part, if there is a good part of a recession.
I love that you just keep, focusing on that silver lining. I love it.
Well, the good part of a recession is it's a cleansing process for the economy. You get rid of a lot of risk. It's painful. Getting rid of crypto risk last year and some risk in the technology companies, that really hurt investors. But this year we're already seeing recovery from technology companies because they were very early on into layoffs, into recessionary conditions. So there is this silver lining that when companies go through recessions, they get more stable, they get more lean. And when they come out, if you're a shareholder like we are, the new revenue coming in drops to us with fewer expenses through the company. So the company is a big funnel of revenue to shareholders. If the funnel opens up a little more at the bottom, we get higher earnings, which drives the stock higher. They also have the opportunity to increase dividends for us. So that's the good news. But the good news is the end of the recession.
Well, should people have a sense of confidence in knowing that the market is coming back? Because this isn't our first rodeo with these sort of market conditions. I mean, COVID threw everything into a tailspin, so obviously nobody has had experience with that. But I mean, we have been through these before, and we kind of have a plan of how to come out of them, and like you said, a way to kind of see what's going to happen.
Yeah, that's the beautiful part of capitalism, is that it does continue to grow. We get these moments where we grow too far, too fast, for whatever reason. But we also recover. If we don't recover from this, it'll be the first time in history that we haven't recovered. So I'm going to bet on the fact that we're going to recover, that markets will come back. Look, over the long term, the stock market gives us, on average, 9 to 10%. It doesn't come in a straight line. If it did, that would be so much easier. But at that point, nobody needs me.
Well, thank you for sharing your expertise with us today, because we clearly need you.
Well, thank you. It's good to be needed.
A comforting voice, voice of reason.
I wanted to just ask, does Patrick Financial Group, do you guys put out like any type of newsletter or information on kind of like these updates that people can follow?
So we do market updates. They go to our clients and prospective clients, and anybody who wants to jump on that list is welcome to call the office.
Awesome. We'll provide all your contact information in the show notes. So yeah, we can have that in there. And anybody listening, feel free to reach out, because wonderful, wonderful information. And we appreciate not only everything you guys are doing as a business within our community, but really just helping people.
Well, thank you so much. And thanks for having me.
Awesome.
This has been wonderful.
Thanks for being here. It was fun.
Yeah. Diane, did you have anything else that you wanted to add today?
No, I think we covered everything.
All right. Well, thanks for joining us today. And we hope you guys check us out on the next Business Beat.